So it is almost the end of 2023 already. It seems like it just very recently when I was making an article called, the best stock I'm going to buy in 2012, but time is flying by. I've been at this for a long time, and it's fun. Every year, it's fun to look forward to what's going to be happening in the next year. So we're going to talk about a few of the stocks and just areas of the market that we think are going to do really, really well in 2024. Before Tyler and I get into it, please take a minute and click subscribe to my channel and check out a message you see on your screen for a message from our sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it's a great way to support this work we're doing. So before I get into an individual stock, Tyler, you've noticed that the market's performance has been driven by a certain group of companies, and you think that might reverse. Is that correct?
Yeah, I mean, I feel like I'm gonna get kicked by the same horse again and again and again because anybody has used the word mean reversion over the past 6 years has just basically been slapped in the face by the market. So, but you know what? I'm gonna go back to the well anyways, and this is why. Like you just said, there is when we talk about the market, we typically mean the S&P 500, right? It's kind of the broad-based market indicators, and it's the largest companies. Well, almost half, if maybe not slightly more than half of the entire equity in the S&P 500 is dominated by 10 companies, more or less. It's like 9 tech companies and Berkshire Hathaway. So if my thought is that I think because the valuation of those particular businesses is so stretched, and it I have a hard time seeing like expected future returns beyond what is priced into these companies right now being exemplary. I think the market based on those 10 companies is probably going to have not a down year, but not a below average return year. And so because of that, I don't have to look for a whole lot of outperformance. I just need to outperform that. And I think one of the places I could do well, at least in that regard, is small caps. It's a part of the market that has been largely ignored for the past 10 years. If you look at the Russell 2000, which more or less tracks small cap stocks, it has wildly underperformed the S&P 500, the NASDAQ composite, the NASDAQ 100, basically anything that is connected to those 10 large companies. And this has not been the case up until about 15 years ago, but post-recession or financial recession in 2008 is when we started to see this widespread. And again, I'm gonna go to the well of mean reversion and say, like, people have exhausted the returns or expected future returns on the big companies, and they're going to start fishing in other waters. And one place that has been habitually undervalued for the past several years has been small caps. And so I think 2024 could be a pivotal year in small caps, maybe gaining back some ground on its large cap brethren.
It's funny you bring that up, though, because the day we're recording this, which is December 4th, as I'm looking, the NASDAQ is down by approximately 1% for the day, and the Russell 2000 is up by nearly 1% on the day.
Nailed it. Let's call the year. I'm good.
So what you're saying is that trend is going to continue into 2024. So it's an interesting call, and I'm generally very bullish small caps in my portfolio. One that I think is going to have a great year in 2024, and there's a kind of a 3-part thesis here, is Redfin, the real estate disruptor. Now, Redfin's already almost doubled in 2023, or maybe it has doubled. It's kind of oscillating back and forth at that level. But so 3 reasons that I think Redfin's still going to have a lot of upside ahead of it. I mean, the first is the most obvious. The real estate market's still very slow. It'll benefit if the real estate market picks up. Right now, mortgage rates are still in about 7.5%. Existing home inventories are at a generational low. The market is essentially, in wait and see mode. So I think the real estate market is going to thaw. I've said before that I think mortgage rates are going to come down considerably in 2024, which would be a very good catalyst for any type of real estate broker, specific in Redfin in particular. Number 2, and this is kind of the most central part to the Redfin thesis, is that realtor fees are finally getting the scrutiny they deserve. There's a very antiquated structure when it comes to how real estate agents get paid. And I'm sorry, because I know I have like 3 real estate friends that watch my videos. I'm sorry to say this. Commissions need disruption. I am totally happy to pay you, the standard, 3% of my sale if you're doing that much work and it really is that much effort and things like that. I'm totally fine with that. I want people to get paid for their job. But the typical real estate selling fee has been 6%, 3% to the buyer's agent, 3% to the seller's agent for decades now. And technology has enabled realtors to do their jobs easier. That's kind of Redfin's whole, premise. Their typical sales commission is 1.5%, and the logic is we make realtors' jobs that much easier. You can, show a house without ever having to go there. You get let the buyer in remotely and things like that. We use virtual tours to our advantage, things like that. So that's really the thesis there. There's a big lawsuit. You probably read about it. The National Association of Realtors was sued for artificially keeping prices high. The big reason is because, as it is now, sellers are required to pay both sides of the commission. And the logic is, if buyers had to pay their buyer's agents' commissions out of their own pockets, would they even hire buyer's agents? Let alone what would the commission structure be? That's a good thing for Redfin. It's a highly tech-focused platform. It's designed to make realtors' jobs easier. And there's 2 components of how much realtors get paid: how much sales volume they do and what percentage of each sale they get. And if sales volume, or if their commissions decline, they need to raise their sales volume to continue earning the same amount of money. And they're going to need a platform that helps them do that. Redfin can really fill that void, and they actually just rolled out a very agent-friendly commission structure that they're calling the Redfin Max compensation structure that could be very, very attractive in this economy. And last but certainly not least, and I'll keep this quick, they are forecasting to be profitable. Redfin is finally focusing on efficiency. They made some very tough decisions over the past few years when it comes to layoffs and things like that. They got rid of the Redfin Now iBuying business. Now they partner with companies like Opendoor and generate referral fee income, which is what they should have done all along. But despite the revenue declining by 12% year over year in the latest quarter, Redfin's loss narrowed from $90 million to $19 million. They're still losing money, but that's a big improvement. They're profitable on an adjusted basis right now. And they say they are going to be GAAP profitable in 2024. Now, that could really happen if the market turns around. But if they can achieve GAAP profitability in this kind of real estate market, that's a very good sign. I think the combination of those 3 things, I think the trend toward lower real estate commissions is much more of a long tail trend, but it's finally getting the attention it deserves. Redfin's been screaming for 15 years that the real estate commissions were too high. So I'm glad to finally see it getting some traction. So Tyler, what do you think about Redfin and its growth prospects in 2024?
Well, I certainly agree on the sales velocity of homes, basically meaning like I think sales of homes in 2024 is going to pick up. And certainly there will be, the added attention on lower fees that Redfin offers will be something that they do. But I think your thesis is really contingent on them capturing more market share, which is something in the past couple of quarters they have not been able to do. I think they've been so much in that efficiency and gutting that they've been, kind of whittling down to where they think they can get down to profitability and have been ceding a little bit of market share in the process. And so I think a lot of what you're saying, at least on the uptick to profitability and having that turnaround that you expect, is really contingent on them nailing their execution, getting the blocking and tackling of their business set up so they can, bring out a couple bit more costs and go back to taking market share across the industry. If that happens, yeah, I can get on board with you with that. But execution has not exactly been Redfin's forte, and so I'd like to see monumental gains on that side for that to happen.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.